Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, April 4th, 2023. Before we walk through all the charts, I just want to encourage you to please click like and subscribe to the Wicked Stocks YouTube channel and check out wickedstocks.com, where we offer a full assortment of daily and weekly video analysis, including daily triple Q, daily SPY analysis, 2 individual stock picks every week. We also have weekly longer term analysis in the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT. You may check that out. Very reasonable price. And if you're not happy within 5 days, just shoot us an email requesting your money back, and we will refund it in full. Let's take a look at the charts. This is a weekly chart. This 232.31 remains a longer term objective. We may reach that over the next few weeks. It's been a 2 to 3 month objective for about 2.5 months. We came off this long term channel bottom in early January, and on the way up, the market settled then above this intermediate structure. That was on a positive earnings. At that point in time, about 2.5 months ago, that launched us into a 2 to 3 month buy signal at 232.31, which remains in effect, actually above this 143.26 to 151.37 area. So, we could fall back into the 140s, 150s over the next month or two, and then turn back up to 232.31 within several months. So that is a possibility. It may take longer to reach 232.31 than the 2 to 3 months, but it remains our overhead ceiling, if you will, a big test for this market in the coming weeks. So let's take a look at we'll break down the 2 to 3 week time frame, still constructive above 184.72. We might see that level today. I'll show that in a moment, what would be the indication for that. In any event, 184.72, if tested over the next day or two, able to contain selling through April. And once tested, we could rally to 213.16 within a week or two, and over the following 2 to 3, 3 to 5 weeks, 232.31. So I will say that holding above 184.72, we should, by the end of April, reach 232.31 as a completed objective, where Tesla can top out on a quarterly basis, quite possibly through Q3. Back to this image here, 184.72 is also backed up, if you look to the far right, by 180.21. I'll show that in a moment. That is a new channel structure. Yesterday, we bottomed out a bit at 192.92. Actually, it was a little higher, actually. On Monday, we slipped below it. I have it as a mere minor point right now, and I'm deferring more to 190.52 as our session containment level. So at 190.52, this simple channel bottom over the last week and a half can contain session weakness, where we remain stable for the day above that, and we could actually turn higher. Upside today, 201.83. That is nothing more than a 5/8 upside Fibonacci over the last 2 days. Friday's high, Monday's low. 201.83 to the upside is a 5/8 upside Fibonacci. It's also very close to Monday's high of 202.68. So it has pivot point qualities. We can top out there for a good part of the day. If we push through 201.83, might we actually reach 213.16? I think it's a stretch, but honestly, I had trouble finding any point above 201.83 that I would feel comfortable aggressively selling for the day or for a good part of the day. I think if we push through 201.83, you should make way for 213.16. Whether we reach it or not is another question altogether. But if we do test 213.16, this former channel bottom, it could contain buying into later week, and from there we could fall off again to the 184.72 speed line within a full week of testing 213.16. Finally, closing above 213.16. I don't see that today, but it is possible later in the week that we would then possibly by the end of next week actually reach that 232.31 longer term resistance area on the weekly chart, which remains a long-term objective above that 143.26 to 151.37 area. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's cover the downside a little bit. We've got 190.52. If we break 190.52, that is our signal for 184.72 today. 184.72, I couldn't really go with a sell signal below it. I mean, if we close below 184.72, that is a sell signal by one measure, but I really think we need to hold out for 180.21. So I would rather call 184.72 the start of a wide 4.5 point zone of meaningful support down to 180.21 that can absorb selling through the week. This 180.21 should actually be considered a weekly or multi-week support level because it is in close correlation with 184.72. So we will correct that quite possibly by the time you download this letter, if you do, but certainly tomorrow. The 180.21 to 184.72 area can absorb selling through April and above which 232.31 in reach over that time frame. So this is a big area, and it is expected today if we break or open below 190.52. So if I were to dissect the day trade, it's buying 190.52, selling 201.83. You can see here to the far right. If we push through 201.83, you're going long really for the rest of the day in anticipation of a possible 213.16 by the closing bell objective, where you could liquidate that long position, and you 3 to 5 day swing traders perhaps play the short side back into the mid to upper 180s again within the following 3 to 5 days. Finally, if we close above 213.16, you 1 to 2 week position traders, you're long up to 232.31. The 3 to 5 week to 1 to 2 month position traders should be long anyway, following the test a few weeks ago of this 184.72 speed line that was then in the lower 160s, and that was the opportunity at that point in time. It remains a buy opportunity at 184.72. So once again, if we break, and this is the wrong level, 192.92 is nothing more than a minor point. If we break 190.52, 184.72 expected intraday. Whether you play the short side then below 190.52 down to 184.72, that depends on the way you day trade the market. That might be a little tight. You could also just hold out for 184.72, which is once again the start of a relatively wide zone right now down to 180.21 that can absorb selling through April. Now, if we do close today below 180.21, we have, I think we've indicated then a good April high. Over the next 2 to 3 weeks, we should fall back into the mid 140s. 146.06 is actually inside this band of long-term support on the daily chart between 143.87 and 152.27. This area becomes a 2 to 3 week target if we settle today below 180.21. So, the emphasis remains bearish, whether you're a 3 to 5 day swing trader or a 2 to 3 week, 3 to 5 week position trader, near-term investor. You're then reaching perhaps for 145 out of the money puts if we close below 180.21. Until then, once again, if we dip into the 184.72 down to 180.21 region, it is an opportunity to get long, either buying Tesla or reaching for 220 or 230 out of the money calls that don't expire for at least a month out. I do want to mention, and I don't know how this is actually going to relate to Tesla, but we do need to mention crude oil. That if we close West Texas Intermediate at the end of this week or any day this week, this is a weekly chart, but this 8078 formation is our pivot point for the broader crude oil market as we move through spring. And if we settle above this formation by a 1% margin, you may write this down, 8160 or higher. That is the May contract, the May futures contract, 8160 or higher. Certainly at the end of the week, this market shows a significant buy signal actually through the rest of spring. For the next few months, we should then push into the mid to upper 90s. That's about a 20% gain at the pump, probably is the way that would play out. And I can't help but think that that's going to, sort of, re-emphasize the interest rate inflationary dynamic, headline grabbing. Interest rates will continue to climb at probably maintain an aggressive pace. That could weigh on the longer term stock market. But Tesla may be that exception because of its it's an electric vehicle, right? So it should do well in a high crude oil priced environment. But I just wanted to throw that out there. I think that the analysis of crude oil is a little bit more appropriate with respect to Apple and the broader NASDAQ and the SPY. And by the way, I do the daily NASDAQ and the daily SPY, the daily Triple Q, every single day at wickedstocks.com. So check us out there. And I'm just going to leave it at that. Please click like and subscribe. Be back tomorrow with Wednesday's Tesla report. And you have a great evening.